Over to you.
Thank you for that, Sonia. And as you said, well, yes, Jonathan Barratt of Probis Securities is joining us now for the show. Jonathan, hi, good to have you. And I want to start with the crude oil prices because the 7 weeks of gains and nearly 20% of gains within that time seems to be getting lost. Last week was a negative one, and this week looks at some consolidation right now. How are you reading the fundamentals? What's your sense on the prices from here?
Manisha, thanks very much for having me on the show. Look, I think generally we saw that the market getting a little bit ahead of itself, ahead with all the concerns we have in the macros, particularly in China, and also a slowdown in economic growth in China and in America. So we saw some profit taking. But at the end of the day, I still think that supply tightness in oil will remain there. And as a result, I think we'll get back to it actually trending higher from here. But it is against some headwinds which we can focus on.
But do you belong to the camp which thinks that $90 is coming?
Look, I think so. You just look at that supply tightness, and whichever way you look at it, when you look at what's happening with OPEC, when you look at what's happening in Ukraine and Russia, there's sort of this groundswell continues to be there. And as a result of that, I think it is one commodity that is pretty much trading against the trend. I would like to see it sort of get to that area, and that's about it, because I do think they'll be overtaken by those other macros which we've been focusing on for some time, which are now starting to come into play in some of the other commodities.
When you look at the fundamentals, as you said, on the one side, we have Saudi Arabia and Russia cutting production. On the other side, the U.S. production continuing to increase. How would you look at both the numbers, and what would you think would reign and rule on?
Look, I really think we just look and see what the interest rates happen how they happen in America and how the economy sort of evolves from that, and how things happen in China as well. When you look at the Fed's policy, the FOMC meeting minutes that came out last week, it said that they're quite interested in keeping interest rates tight if they need to fight that inflation. And of course, you've got the property sector in China starting to unfold with some of the other commodities. So when I look at the oil price at the moment, I think those headwinds are certainly there. I think what Russia is doing and what Saudi Arabia are doing, they're trying to make sure that that price of crude oil and any dip is well supported by persuasion. But at the end of the day, it's all got to come down to that economics and see whether there's enough demand to keep it up at those levels.
So with that on light, Jonathan, what's your range for the crude prices for the rest of 2023?
Look, I would say around that 90 is the top end. I would like to see it come back. I do think that the supply will be there, but it'll be restricted. I'm more concerned about what's happening on the demand side and how that will be affected by the issues that we're currently dealing with at the moment. And I think to that light, some of the other commodities. I think 90 is pretty toppy. I don't see it really getting past there because I don't see there's much new news to actually push it there. There's not that economic groundswell that'll really push it. The only thing that could see it push through that 90 level will be what happens in Russia and Saudi Arabia in terms of the shortage of output. Up from that, I think that's my top. I would like to see it wrestle back round to that $70 a barrel.
All right. The other thing that markets are keeping an eye on is in China, and we did see some rate cut yet again coming in, 10 basis points, not very impactful, but that's perhaps what the street was anticipating anyways. What's your sense on what might we see from China with the Evergrande again making headlines yet again? How would you look at that impact coming in for the industrial metals?
Look, this is a worry. I think this is a concern that I do actually hold. Because you saw the shadow banking situation as well. You've got a contagion slowly starting to smoulder. And I think that's going to play out in those base metal prices. You've got a lot of money, $300 billion for Evergrande. When you look at Country Estate, another $150 billion. When you look at that shadow Zhongji, when you look at that shadow banking fund that's sort of now got some issues, if they can't resolve them, then that's going to come into that direct need or demand for base metals. So when you look at the prices of copper, when you look at the prices of zinc, iron ore, at the end of the day, steel, if that Chinese economy is not doing what it's meant to, regardless of all the stimulus, then I think you'll see commodity prices or those base metal prices come under pressure.
Which they have been, and add to that the fact that we also are looking at rising inventories. I mean, whether it's iron ore, where we at port are record inventories. Same is the case with copper, zinc inventories running up to 17-month highs. How would you look that on ground?
Look, you've just got to look at it. Absolutely. This is the market that will take any form of noise about how the property sector in China is evolving. And let's not think that this has been smouldering for some time. We've seen these effects now since Evergrande first failed on one of its bonds, which was in 2021. So this has been smouldering. They've been trying to solve this result for some time, and it hasn't happened. So as a result of that, you've got inventories buildings. You've got the potential for the property sector to continue to slow. Remember, new home sales were down. I think it was something like 33% last month. And new home sales for country gardens was actually down 60%. So things aren't looking that positive, I think, in China on that property sector. So you take that aside, and then you look at the US economy slowing down because of interest rates, and you don't really see a healthy picture for some of these base metals.
All right, not a great picture at all. So how much further do you see the metal prices declining from here? Are we anywhere close to bottom yet?
No, I think we've got further to go. I mean, but you also got to think that some of the base metal markets are you have supply issues, and that's copper, which we've talked about quite a bit. Copper in itself has its own little supply dynamics, demand dynamics. But I think that whole market, the whole base metal market, has got further to go. You could easily, I think, look at a good 10 to 15% before you find some sort of ground for support. Copper, slightly different story, but the others are there. Iron ore, when you look at it, it's at 108. I think you can go sub 100, just because we've got that build and those concerns.
Okay, all right, Jonathan, as well as Manisha, thanks very much for joining in and taking us through the commodity space. Well, as of now, we have the